Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, April the 17th. The year's 2019. Let's talk trading. Horizontal lines, Wick zone. Um, I read a comment out there that they were saying the rat zone and the Wick zone are similar. Well, there's really maybe only a couple of things that are similar. One, there's zone trades. In other words, price isn't going to stay inside the zone. It's going to leave the zone. The second thing is similar. They were born out of statistics. Um, it was I was observing something on the chart, and then it was like, wait a minute, am I really seeing what I think I'm seeing? So then I run frequency distributions to either say yes, what you're seeing and how you interpret it is accurate, or it's not. And so those are the two things that are similar. But beyond that, they're different trades, really. I mean, the rat zone's a reversal, whereas the wick zone is a breakout trade. It's going to break out one side or the other. It's just not going to stay in there. Whereas the rat zone, you're going to reverse off the current daily high or current daily low. It's just not going to stay within 20 pips. It's usually not going to stay within 20 pips. So remember, all this stuff is for educational purposes only. Your results may be different, that disclaimer. And the other thing is, the true mark of genius is where you take away everything that you possibly can take away and just leave the essence, the core. And that's what I've done with these systems. They're very simple. You don't have a bunch of indicators, you get no squigglies, you don't have just a whole bunch of stuff thrown in there. I mean, if you want to use other stuff, that's okay, but it's not necessarily necessary. And many times you're only fooling yourself into believing something unless you can back it up with statistics. It's basically just an opinion. I mean, I'm paraphrasing Deming. It's like, unless you can show me a process, step by step, then you don't know what you're talking about. So anyway, one thing I do know is money and risk management. Every time you place a trade, you have to do this beforehand. You have to use your money and risk management so you don't lose too much on any given trade. And if you do that, you can stay in the game. If you don't, then you risk losing it all. Okay, we look here and we can see that the Euro end's just hanging around the weekly open right here. I mean, we don't have much of a weekly range at all. And you can see here the gaps filled, and we're not in any of the wick zones here on the weekly. We've already been in it, out through the top and out through the bottom. So no wick zone trade here on the weekly. Now, this is the normal wick zone screen. You probably wonder why. Hey, how come he's not showing that? Well, I put it up here so you can now see it. But as you can see, price entered a wick zone and exited. It entered, it exited, it entered, it exited, enter, exit, enter, exit, enter, exit. I mean, how many times do I have to say it? Price doesn't like staying in the wick zones. I've run the stats. I've shown that. In fact, I have another one of my couple more frequency distributions that were made specifically for the wick zone here, and also put up the wick zone multimeter, and once again another look at the dynamic wick zone. Okay, and then the history just shows you did it stay inside the wick? Did it close above the wick? Did it close below the wick zone? Or outside of the wick zone? So, or is it actually this one here? You can see it's in the lower wick zone. This one here, prices in the upper wick zone. And here, prices outside of wick zone. And here, prices outside of wick zone. So that's just the history indicator, and it's telling you, see right now, price says on this last one it's outside, because you can see here This candle hasn't closed yet. Okay? But it is outside of a wick zone. It's not in the current wick zone, which is here and here. Okay, the frequency distribution. How many times does its price close between the high and the top of the candle? 14% of the time. On the daily, 1,000 days. How many times does it close inside the bottom and the low? 13% of the time. Outside, 71. So as I stated before, you got a 6 out of 10, 7 out of 10 chance the price isn't going to close within the daily wick zone. It's just that simple. Here we've got, how many times does price run through the top of the zone? Through the top zone, 47. How many in and out of the top? 29%. In and out of the bottom zone, 20. Through the bottom zone, 43. Once again, showing how many times doesn't even hit the zone? Only 8%, 8.7% of the time. These are statistics. This is the proof. Wick zone multimeter just shows you, okay, on the H4, you can see here, we are below the lower wick zone, right? On the M5, right here, well, we just were in it. Now, see, right there, we're in it. The dark green, we're in it. Here, dark red on H1. You can see here, we're inside. It's great. Oh, I know why. So you've got bid and ask. That's why. So when you're using bid and ask, sometimes you want to make sure the price is totally in the zone. That's the way it's set up. So you can see here, we've got price now, great. But here on the M5, you can see here, it's above the wick zone. M15, you can see here, it's right inside the wick zone. So that's what those colors are. It might be hard to see. That's bright green or lime. That's the regular green. And that's the maroon or fire brick red, I think they call it, versus the bright red. But once again, and you can see here, these statistics, even on the M15, you can see they're pretty much the same. You look at weekly, pretty much the same. I mean, 70% or better. Monthly, it's a different story. Okay? Totally different story on the monthly. So but I like to trade the wick zones on the daily, and then you can use the hourly or the M15 for knowing when to take profit. So I hope if you weren't convinced as of yesterday, hopefully this will convince you that of the validity of the wick zone trade. Once again, we're just talking simple horizontal lines based on the previous day's high, the previous day's candle top, the candle bottom, and the previous day's low. It's just simple. There's nothing esoteric about it. There's nothing complex about it. It's just flat out simple. Here you can see here we've got the daily high. We went through it. In other words, leaving that upper wick zone. We saw it on the chart before. See here, we went into the lower wick zone and we exited. We saw that on the chart before. Only 53 pip range though, but you can see the New Zealand pairs have lots of range here. And the pound New Zealand coming in at 297. A lot of movement there. Is anybody out there trading the new beast? Let me know. I'd be curious. And as you can see here, back to the euro yen. We had a little dip. Now we had a little rise. So we're talking about 6, 7 pips of price movement. And you can see from whence I turned on the computer. We've got the Einstein lines here. So there was it's way back here. So you had a break to the bottom, good for a few pips, break to the top, another one, maybe a scratch trade. Here you go. It's not really, it's just hovering. So no reason to scratch if it's hovering like this. And then you see finally you get a movement and then another movement. Nice trading there, right through the zone here, up, and then another one and up. So once again, horizontal lines, trading them can be profitable. Okay, we've looked at that screen. Once again, showing the Wick zones, meaning more than one. So we've got price in the H4 lower, H1 Wick zone, wait. Okay, no Wick zone trades now. Price has moved out of the Wick zones. So you see how that works dynamically. Now, you can, if you don't like that, if that's too, let's see, only showing zone false, then you won't get all of that flickering. Some people don't like that. And then here, once again, just simple range gauge, showing the wicks, the length of the wicks. So if you think about it, you can trade out of that zone. You can actually trade going into the zone, possibly out. But if you trade going in, there's a chance it could come back, it could scratch, or it could bust through for a bunch. Once again, showing wick zones across the different pairs. Oh, one thing I'll show you here on the HL5. People wondering what's going on here. It was something I learned how to do, so I put it in a bunch of indicators. Where is it? Show side markers right here. True. And I call those side markers. So that way you can just look on the side here and you can see where price is in relation to everything else. One of the things I should have done on this chart, I didn't even think about it. If you turn the grid to none and you get rid of that line running through your gauge or your dashboard, but you can see here that the current price is still right here. Then of course you can always put on the spread dots if you want to see the current price, and see weekly range 61, daily range 53. Just not much range this week, sports fans. I mean, today's Wednesday, Tuesday, Monday. There's just not much of range. And for those of you wondering, this is the ATR. We've got the daily ATR, weekly ATR. Based on the ATR lines, the minimum was the ATR 3 and the maximum was the ATR 8, the values between ATR 2 and 14. And on the daily, you can see we had a minimum of ATR 3 and a maximum ATR 6, and that's the range. And you can almost think of it as another type of wick zone, in the fact that price goes in but doesn't like to stay inside the zone. But usually this is for reversals, and as you can see here, it was a nice reversal trade outside of that zone. Well, that's it, fellow traders. It's not what you trade, it's how you trade it. So go out there and drain the banks.